Good morning. It's the 1st of June. We are Signal Centre Talking Bull. I'm Joe, joined by Steve. Good morning, Steve.
Good morning.
How are you doing today?
Very well, thanks. Top of the morning to you.
Indeed. Okay, so first trading day of a new month. Pretty choppy to end it yesterday, but let's get into the latest headlines and then we can have a look at how the charts are shaping up for the day ahead. If there's any requests, feel free to post them up and we'll do our best to cover as many markets as we can. Stick it in the comments and we'll get to them shortly. Okay, so there was a sharp decline in German inflation yesterday. The German consumer prices posted a 0.1% decline for May compared with expectations of a 0.2% increase. The inflation rate declined sharply to 6.1% from 7.2% previously. So that is a good sign because we've seen, well, a bit of mixed data of late on the inflation front. The US Chicago PMI index slides. The manufacturing index declined to a 6-month low of 40.4 for May from 48.6 previously and below expectations of 47. The data maintained a run of notably negative releases for the manufacturing sector. There was stronger jobs opening data yesterday. The JOLTS data recorded an increase in job openings of 10.10 million for April from a revised 9.75 previously and above expectations of 9.78 million. The data maintained expectations that the labour market was still tight. More comments from Fed governors yesterday stated that skipping a rate increase at the June meeting would give the central bank time to assess the data, although this did not mean that the rates have peaked. Philadelphia Fed Harker took a similar view, reiterating that it would be a skip, not a pause. So there's been another shift in the Fed funds pricing, with expectations of a June hike dipping to below 40%, but the most likely outcome is still seen as a hike in July. We saw stronger than expected Canadian GDP data yesterday. The first quarter of 2023 was stronger than expected, with a 0.8% growth number compared with the consensus forecast of 0.4. The dollar retreated slightly yesterday from fresh 9-week highs following the repricing of the June Fed funds futures. And as was expected, the US House approves the debt ceiling deal. The House representatives voted in favour of a debt ceiling bill with a comfortable majority, and the legislation will now be passed in Senate. We've got important US data today. We've got the latest ADP private sector payrolls data. We've got jobless claims data and also ISM manufacturing index. The data releases will be important for underlying sentiment towards the US economy. And also we've got Eurozone inflation data today as well. So following on from what we saw in Germany yesterday, it could be that we see a bit of a dip here. The Eurozone inflation data will be released on Thursday. Consensus forecasts are for a decline to 6.3% from 7%, with the core rate at 5.5% from 5.6%. Okay, a couple of requests flying in. We will be getting to sterling yen and to sterling dollar. We'll also be taking a look at euro dollar and gold and euro yen. So if there's any more, guys, keep them coming in and we'll get to them shortly. Over to you, Steve.
Lovely. Thanks, Joe. I'm going to take a look at Bitcoin to start with. Let me share my screen first. Here we go. That's just the hourly chart, but let's take a look at the daily chart because we are seeing this, potentially we're seeing this head and shoulders formation that we've highlighted quite a while ago playing out. We had the break through the neckline. We've now had a double retest of it. And since Monday, price action has been pretty negative on Bitcoin. And we're starting to see prices break down. 26,780 we're trading at the moment. Support really comes in just below the 26,000 level. So that's the level to watch on the downside. If we do get some sort of close below there, especially on a daily basis, then it really opens up the potential for an extended move lower, potentially down to the 20,000 level. So let's really sort of like bear that in mind. Resistance will now come in around about 28,500, and obviously that was you know, we're not going to forget the weekly sort of like band of resistance that we got up here anyway. We struggled to we didn't get through there. The inverse head and shoulders failed to reach its measured move target and stalled at 31,000. Then we had the reversal lower, which we're in now. So yeah, not looking great on the Bitcoin for this week. And let's take a look at Ethereum. Ethereum really sort of almost mimicking what Bitcoin's done. A little bit of a slightly more positive day on Tuesday, but we're extending lower now, down to 1853 trading at the moment. Real level of support is down at that pivotal level that we've had for a long time, 1730 to 1740. Resistance coming in at 1930. Yeah, similar sort of price action. We had this head and shoulders formation. It's sort of like broken up quite aggressively through the neckline, but seems to be failing at the moment. You can see the momentum, the MACD also starting to turn a bit lower. XRP has held up a little bit better, although it is showing signs of a potential. Well, it's like that. There's a hanging man candle from yesterday's price action after a really strong rally up towards 53 cents. Yesterday's price action posted a slightly lower high, and today we've extended lower quite aggressively to yesterday's low, in fact. So we haven't taken out Tuesday's low, which is all the way down at around about 49 cents, but we're breaking down towards that 50-cent level, so that's one to watch as well. Obviously the resistance from that high that we posted on Monday at 53 cents. Let's take a look at commodities, and especially we'll take a look a little bit of a deeper dive into gold. Price action yesterday in gold, obviously this is very influenced by the dollar index, that we've had a real strong dollar rally recently, and we've had a decent sell-off in gold. However, we did get that stall and a bit of a turnaround in the dollar that led to quite a aggressive reaction to the upside, and really nice range. Saw a low of 1932, a high of 1960. We extended a little bit higher yesterday, got up to 1975 before reversing gains, and then still closed positively, but we've given up those gains already today. So on a little bit of the back foot, with the dollar index still sitting around the same sort of level. So we've had this nice little, well, quite an aggressive sell-off with the dollar strength. Then we had this little spike higher when the dollar's wobbling a little bit, and now we're sort of like settled down a little bit. So resistance for me between that 1975 and 1980 level today. On the downside, obviously, the main resistance around about that 1930 to 35, main support, sorry, 1930 to 35. So looking a little bit weak on there. MACD is actually stalling on the downside. So maybe the gold will give us a little bit of a surprise. Dollar index trading around about that 104.30 level. So towards the sort of like 104 support area. But Joe will show us a little bit more on the dollar. I won't step on his toes too much there. On the 4-hour chart, this downward trending resistance line was drawn in quite a while ago. I think we drew it in round about sort of like towards the last week in May, and we managed to clip it yesterday, in fact. So that was a sort of like ran into that level of resistance there, and it posted a shooting star on the 4-hour chart. Obviously, you've got this Ichimoku cloud resistance as well, so that's a good guide to where the short-term trend is. And we've managed to break up into the cloud, a little bit of volatility, and then it's like giving up those gains. So even on a shorter term basis, I would expect that if we do get below that 1950 area, psychological area of support, also there's a bit of horizontal support just above that, then that will probably lead to further weakness. So short-term chart not looking so positive as maybe the daily chart has done in gold. So I'd be quite aware of that. But again, I think it'll be more influenced by the dollar than anything else. Looking at crude oil now, did okay in the gun to head trade yesterday on this. We'll take a look at that in a short while, but really noting that sort of like real on the daily chart, the breakdown through support on really aggressive breakdown on the small upward trending potential support line didn't work, broke down. And another aggressive down day yesterday. We had oil inventories out yesterday. Oil inventories actually was quite positive. So gold was under a lot of pressure. Oil inventories came out, had a big spike higher, but gave up those gains towards the close. And the extension lower has stalled overnight. We've seen a little bit of positivity, but not a great deal. We can see on the 4-hour chart and the hourly chart, we are below the cloud So we are in slightly negative territory. We do have a bit of a reverse trend line, which will act as a bit of support. Also, if we take into account the 3rd of May spike low, which is like an overnight spike, so quite a very sort of like low liquidity spike. And that's sort of like a little bit of a target because it did sort of like match up with the 20th of March low as well. So for me, next real level of support coming in, maybe around about that $64.50 level, but may not see that till early next week. If we look at shorter term levels to watch, resistance coming in just below the $70 level on WTI crude oil. Natural gas, a little bit of info on natural gas again, extended lower, had a bit of a spike up yesterday, managed to get up to 242.20, and then gave up those gains and got down to 226.5, which was a little bit, there was a little bit of support there, I think we had yesterday. But on the daily chart, posting a bit of an inverted hammer, so that doesn't look the worst candle of the world at the sort of like towards the end of a rally. So positive price action day may follow through. I think we get inventories in natural gas later, so that might add a bit of volatility to it. But in the meantime, I'll pass you over to Joe. I've just got to answer the doorbell, Joe. So I'll leave you with it for a short while before we come back to the indices.
Nice, thanks, Steve. Okay, so dollar yesterday, we saw that prices reached the highest level in the last 9 weeks. Prices were pushing higher while we was on the stream yesterday, and eventually topped out at highs of 104.69 before retreating. So obviously we saw the debt ceiling get approved, and we also saw the fact that these Fed speakers were suggesting that there would be a skip in June. So there's been a repricing of the Fed funds futures to now around a 40% chance of there being an interest rate hike in June. And as a result of that, the dollar started to retreat. So we posted arguably a bit of a reversal candle yesterday, coming pretty much in line with this resistance that we have at 104.20 and coming up just shy of a 78.6% fib level at 104.80. Today we are again on the front foot. We're moving higher by 0.1% as things stand. So obviously we may attempt to try and challenge the highs that we saw yesterday, which then could lead to a move higher towards that 78.6% fib level. But we have had a very decent run to the upside in the short term. So it may be that we get some consolidation in the short term, bit of a kind of a rounded formation here before maybe consolidating a bit lower to really consolidate some of these gains that we've seen of late. So let's take a look at the markets that are impacted by the US dollar. So this is euro dollar. We saw a break of the channel way back in mid-May, and prices yesterday tagged that 78.6% fib level pretty much to the tick. That was at 106.40. And it was an engulfing candle as well. We engulfed the previous day's gains, but we did close well off of the lows yesterday, which is a bit encouraging. So maybe we are going to find some temporary support here. So if you are looking to speculate on the long side, given the weakness that we've seen of late, buying close to that 78.6% fib level with a fairly tight stop below maybe yesterday's lows or the lows of this candle here on the 17th of March, then there could be some pretty decent risk reward on offer there. So that's maybe something to consider if you believe that we are topping out on the dollar index and likely to see a bit of a reversal. The other way of looking at this maybe is to draw a short-term downtrend line on this. We've got multiple touch points, at least 4, which is what you require for a trend. That would be 3. So potentially a breakout of this kind of wedge formation here may offer further confirmation that we are going to see a bit of a corrective rally here on euro US dollar. So potentially something in the offering there for the speculators. Okay, let's take a look at cable. So decent move to the upside yesterday. Sterling continues to look quite decent against most currencies, and it's holding up really nicely against the US dollar. So despite the 9-week highs that we saw on the dollar yesterday, we actually saw continued upward momentum here from sterling. So that was really quite an impressive session. Went down all the way down to these lows at 123.51 before pushing higher to close very close to the highs of the session. We have seen a break of trend, so we need to be mindful of that. And potentially what we're seeing here is some sort of rounded top formation taking place. And in order to really complete that and to validate the bearish theory, we would need to see a break of these lows here that we posted on the 25th of May at 123.10. But for now, it's moving higher. We may get a retest somewhere around here, the underside of the broken trend line. But for now, it's holding up quite nicely compared to other markets that are linked to the US dollar. So that's quite interesting. Okay, Aussie dollar, let's take a look at that. There's been a request there. So we know this has been trading within a range for a period of time. We saw the breakdown from that range on the 24th of May, and since then prices have remained below that level. We've also got multiple supports to consider between 65.67 to 65.20. We're well below that. We closed off of the worst levels of the session yesterday, but still mindful of this major support area here between 63.72 to 63.81. We've got some support dating back to November last year, and also a 78.6% fib level of this entire up move. So in the kind of that region there, could be an interesting level to consider longs. In the short term, it looks as though gains are going to be capped by this cluster of what was support now turned resistance in the short term, and we can maybe expect to see lower prices there, and it is off to a negative start today. What else have we got? So sterling yen, let's take a look at that next. Okay, so sterling yen still trading in an uptrend. The pullback yesterday that we mentioned might provide some support. Appears as though it did. That was around 172.32. Didn't quite get there. Actually, the lows of the session were at 172.51. But yeah, still trending higher, still looking pretty good. And again, sterling looking pretty good against most currencies at the moment, even US dollar, considering that's been moving substantially higher. So this is looking pretty good. Pullbacks towards trend support should be seen as an opportunity to buy, looking to target a move to 174.88. So keep buying dips on sterling yen for now. Aussie New Zealand dollar, let's take a look at that, shall we? And then I've got to look at euro yen, I believe, which I'll come back to in a moment. Okay, so Aussie New Zealand dollar trading in a downtrend, or has been, but today we've actually seen a move through that level. And over the last couple of sessions, we can see a couple of reversal type candles or shooting star type candles that have formed into that trend resistance line and has rejected price. But today we've seen a decent push to the upside. Pretty messy all in all, though, the chart. Clearly found some support around here between 105.66 to 105.87. So it appears to be on the front foot for now. A closing break above this trend line is likely to trigger a further move higher into this area of resistance above, which is between 109.30 to 109.52. Even above that, 109.80, where we've got a 50% fib level. So, yeah, looking pretty decent today. Really nice move over the last couple of weeks or so. And looks as though it's wanting to continue that higher. So Aussie New Zealand dollar looking pretty bullish in the short term. And finally, let's take a look at euro yen. So all in all, trend remains positive, as we know. And we can see the pullback in the last session has come back to trend support in the short term. Arguably, we overshot it a little bit, but we are trying to revive that again today by posting some green on the charts as things stand. But we do have clear horizontal support around 148.40, and for me overall this looks pretty bullish, and still expecting to see this continue higher towards 151.61, which is the previous swing highs from the 2nd of May. If we do get a close below this 148.40 level, then that may trigger a bit of a corrective move lower, but it's only likely to be temporary given that we've got such a dominant long-term uptrend in place over the long term here on euro yen. Okay, that's it from me. Steve, do you want to finish off with the indices?
Let me take a look at, let's look at DAX first. DAX is the one that gets requested most. Weekly chart, we ran into the resistance, made a new all-time high, ran into resistance and reacted negatively from there. We've taken out the lows from the last 7 or 8 weeks. So, but we've reacted higher. So yesterday was a little bit of an aggressive sell-off, and we gave up some of the losses, captured some gains just towards the sort of like close, towards the sort of like afternoon session, as the US indices picked up a little bit. So really was on the back foot yesterday's indices, and I was looking at maybe instead of the oil going short in those, I'm begun to head trade idea, but I didn't, and we've had a little bit of an overnight rally in there as well. Let's take a little bit of a closer look. The daily chart, you can see sort of like this week we've had a real negative move lower, broke through the support level that we sort of highlighted on the chart around about that 15,700 level. But this morning we opened up around there and then rallied quite aggressively higher, being up to just below, just above 15,800 this morning, and still on the front foot overall. But still early days. The 4-hour price action is below the cloud. You can see bullish hammer posted at 3 o'clock yesterday for the 4-hour candle, and then we had a little bit of a correction into the close and overnight, yeah, a little bit of room on the upside for you know, an attempt to sort of like stave off these negative woes. We should see resistance coming in around about that cloud level, just below the 16,000 level. If we manage to get up there, still a long way to go to get to there. Are we going to stall before then? The hourly chart will definitely have a little bit to say about that, have some resistance there. Even if we sort of like break it down to the very short term basis, we've got 61.8% fib coming in at around about 15,900. So yeah, quite a positive start to the DAX this morning. However, I am a little bit bearish on these indices. They seem to be sort of like taking a little bit of pressure this week, so we should really sort of like keep an eye on those quite closely. Having a look at FTSE, let's take a look at FTSE. That's been hit quite hard in recent times. Little bit of this topping formation, bit potential for a double top, neckline down at 7,200. Not under any pressure yet, but you can see that the move lower, which started started the week of Monday the 24th of April, and we've had 1, 2, 3, 4. This is the 5th negative week out of 6. We had a little bit of a indecisive week, Monday the 15th of May. But yeah, extending aggressively lower, getting down to sort of like towards levels not seen since the end of March. The daily chart broken down from that triangle formation, broken down really nicely, and heading down towards the supportive area. Probably find a bit of support in front of that 7,200, coming in around about 73.35 to 73.50 from all this price action that we saw back in the middle of March. But yeah, breaking down nicely lower. Yeah, looking out for a bit more price action to the downside, I think, in the FTSE. My headset's just said battery low, so be aware if I start cutting out, Joe. Yeah, taking a quick look at Dow. Last couple of days have been negative, slightly positive start this morning. Support coming in at 32,750, and below that, the main support coming in at 32,570. Resistance all the way up, long way to go, 33,250. The one that was really interesting for me was NASDAQ, because that really extended further than the rest and really led the way on the rally higher. However, Tuesday's price action is a bit concerning. We had that sort of like extended rally higher, you know, really sort of like was aggressive on to the upside, then reversed and closed about where it opened, a bit of a doji candle, but also a little bit of a shooting star type candle. And then you've got the reversal yesterday, which confirmed that shooting star formation. So a little bit of a warning sign, I think, that there could be potentially more further downside. 14,230, the level of support to watch. If we get a break and a close below there, then we are on our way. And I think we really could see that this like price action from last Friday was really sort of like could be given up quite quickly if we do get a little bit of weakness feeding into that NASDAQ. So look out for that. On the weekly chart, you can see that again, it will form a bit of a shooting star candle if we do get a weak close into Friday's price action. So yeah, definitely want to watch. The hourly chart has broken down below the cloud, so good potential on the short-term basis to think about shorting it. Although we have also got the potential for this double bottom formation. Neckline would come in around about the 14,335 level. That's the level of resistance to watch. If we do manage to break up above there, then the weakness could be staved, and we could sort of like save things going into the end of the week. But yeah, potential for a double bottom formation. That's where the support will be, 14,220. Yeah, over to you, Joe, and I'll put my headset on charge while you go through your gun to head.
Okay, cool. So the gun to the head trades, this is where Steve and I pick trade ideas live on the stream as if we had a gun to our head. And couple of basic rules that we must follow. So we are doing this on a live basis. We've got a live account with £2,000 in that we started with, and we are managing that on a daily basis. Each of the ideas we come up with must have stops and targets. We must also have risk reward ratios that are 2 to 1 or better. So for every $1 that we risk, or £1 that we risk, as a minimum, our target must be to always look for a return of 2. The trades are closed at 9 p.m. unless the trades are hit their stop or their target in the meantime. And from a risk management perspective, we risk 1% of trading capital on a per trade basis. Now, these trades typically, when we remember, are uploaded to our TradingView profile. So you can check those out at signal_center. And they're also being put into a live trading account as well. Steve will bring that up in a moment. Let's just take a quick look at yesterday's trade ideas. So I was buying Euro Swiss yesterday. A bit of a cop out really, because it's not really the most volatile of markets, and I wasn't really expecting to see anything huge, but set some parameters that I felt were achievable. If we click that play button, there's some reasons below here in the key levels that for entry of the trade. If we click play, we can see it did start to move quite nicely higher towards the target, but then dip back, and around 9 o'clock it was slightly onside. So we will take that for sure.
Yeah.
In fact, it made about £3.50, which isn't a lot.
That'll do.
That will do. Steve, your trade was really interesting yesterday, because I was watching that on the on the live account, and if we click the play button here, we can see that Steve was looking for a big humdinger of a trade. He was looking for a 7 to 1 risk reward ratio on this yesterday, or 6.7.
You know what? I thought I was going
If
to
you'd
hit it at
stuck
one
to your
point.
two, I thought you were as well. If you were stuck to your 2.5, you definitely would have hit it. But it got all the way down here, and I think you're about £70 on side at one
Yeah, I
point.
saw that. We were back to flat in the account for one thing. And funny, I must have looked at it at the same time as you, and I thought, that feels like enough now. It feels
Yeah,
like I was so greedy in the morning looking for this big 7 to 1 winner, and I thought should have really settled for sort of something a bit more realistic in a sort of like an 8-hour time frame, or however many hours we get. Was it 12 hours we get to
yeah. I mean,
play out that trade?
from sort of 2 p.m. onwards, it went back to basically
Yeah,
flat, back to entry, and I was like, oh no, what have we done? But
that's
we're not allowed to touch these trades. That is the rules.
yeah.
We have to set and forget.
The oil inventories was a bit of a strange one actually, because the oil inventories was showing like record production and WTI. So I thought that would have been more negative, but I think maybe that news was already absorbed by the market before it came out. It was almost that they were expecting that figure, and it
Yeah,
was a bit of a relief rally on the back of it, which sort of like throws people when they sort of don't realise the market's already absorbed that figure. It's already priced it in,
yeah,
and it sort of caused a lot of people, lot of shorts out, and and then the reaction high. And I thought, I can't believe I was like £70 up. Especially when we only risked £20, just short of £20, and it's going to go all the way back to flat. It did. It almost went back to flat, and then sort of had that little bit of a sell-off into the close, thankfully, which gave me I think I was a couple of R on side, so
yeah.
I'll settle for that.
£48, just over 2R. So
Which is
that
like my
is,
normal. That's my average, I think, Joe, isn't it?
yeah,
We've worked out my average is around about 2.25, so on my winning trade. So yeah, it's it's one of those things. It would have been nice to get a big old winner out there, take a little bit of pressure off, but we're still hanging around that watermark.
yeah. So my trade today, Steve, you kind of mentioned that you might be interested in this too, but I'm looking at Eurostox 50.
Yeah,
Looks as though we've completed a double top here, so we can see the top here at 44.15. We've rallied into that level on a couple of occasions, and prices broke through that yesterday quite convincingly on a closing basis. This morning we're in the process of seeing a retest of that neckline. I've got it coming in at 42.62. That's on the daily chart. So if we take a look at the intraday charts, just to try and kind of finesse the entry a bit, we can see that big area of support, which is broken down below yesterday and now being retested as resistance. So I want to sell that at market with a stop loss at 42.81. There's the double top. So on the hourly chart, we can see the first top here, the second top there. I'm targeting a move down to 42.05. That's not enough for the risk reward ratio, is it?
No.
No, I'm going to have to tighten it. Okay, stop 42.75. Target 42.05. That's 2.3 R roughly on Eurostoxx 50.
Yeah, managed to get that on just now. You can see just gone short of it there. Stop up at 42.75, target 42.05.
Yeah.
So yeah, that's on and running, up and running.
Yeah, I mean Eurostoxx is quite a good market actually. It's quite a low value market in terms of its price. You know, if you look at all these indices, well, you look at Steve's screen there, you can see FTSE 7845, DAX 15,000. CAC 7,000. So
Yeah.
by having a smaller number, it means that it's easier to be traded for a small account without you having to risk too much money. So Eurostoxx is a bit of a favourite for us there. S&P 500 is another one that can work quite nicely as well.
Yeah. It would have been nice if you could get that stop just above that little.
Yeah, well, that's what I was aiming for, but the risk reward wasn't enough. And
annoying.
looking at the target, there was a level that I saw on the chart on the hourly. I'll just bring it up so you can see. So on the left-hand side, there was an area here which has previously been support. And also, if you look at the average true range and just apply some sort of...
Oh, nice, like that.
It's right at the lower end of the kind of average true range band. So
yeah,
that works for me.
Yeah, we've got fingers crossed, Joe. I'm actually going to go gold. I'm thinking that I just had a quick butcher's at the dollar index and sort of like thinking it's had a little bit of a bounce from around about that 104 level. Looks quite positive, trade around 104.40, and I'm sort of thinking if that can continue, then gold might come under a bit of pressure. On the 4-hour chart, obviously, that's the main thing, that it sort of topped out at this 1975 level, the sort of downward trending resistance level, and it's in this last 4-hour candle from 6 o'clock, which will expire at 10 o'clock. This candle, that is the one that's really sort of like broken through the short-term support. So for me, as I say, we're back below the cloud at this point in time, so not a bad place to get in short. I would have preferred to see the hourly chart below 1950. And that would have broken through the hourly support as well. So then that would have, I would have had a bit more confidence. But I'm going to go short of gold. It's going to be quite a tight trade as well, because the target for me is around about this 1930 level. See if we can get this on. It's a little bit more difficult to get something like this on, because we are, oh, maybe we can. Let's see if we can get a 1%. Stop is, maybe we can leave the stop around about where it is, and the target is around about 1930. Yeah, that's not bad. That'll do. It's only risking, why is it only risking £9? Yeah, that looks good. Risking £18, so that's about as close as we're going to get, I think. Targeting a £40 up winner. So let's sell that, see if that, yeah, the stop feels a bit tight, 1966.59. So maybe that World Cup winning year might do the job for me. Will it be lucky for me? As I say, I'd rather have the stop a little bit higher than that, but we're sort of trading with quite a small account. So yeah, targeting a move down to that 1930 level. That's my gun-to-head trade idea.
Lovely stuff. Okay, so they're both on. Let's have a look at the data that's due out today, just to prepare ourselves for some potential volatility. So 10 o'clock UK time, we've got Eurozone consumer prices. This is the latest read on inflation. Yesterday, we saw the German number come in less than expected, so inflation coming down, which was quite good. So we may see that replicated again in the Eurozone. At 1:15 UK time, we've got US ADP employment. So that's a bit of a precursor to the non-farm payroll number, which is due out tomorrow and will be assessed for the Federal Reserve and all the Fed speakers with regards to what they do with interest rates. We've also got US jobless claims out just shortly after, 15 minutes after at 1:30. And then at 3 o'clock, we've got the US ISM manufacturing index. And tomorrow we've got the non-farm payroll. So plenty going on in the markets. Do be careful out there. That is it from us today. We'll be back tomorrow. Our trades will be posted up to the TradingView profile. So if anybody wants to check those out, feel free to do so. And we will see you in the morning.
Yeah, cheers.
Thanks, everyone.